early 2016, the FASB issued a new standard intended to improve financial reporting about lease transactions. The definition of the lease in the new standard is very much similar to the definition under current GAAP. However, this new standard uses the concept of control. This is very similar to the new revenue and consolidation standard. In the new leases standard, control is determined by having both a power element and a benefits element. This is different than the current GAAP. The major change for lessees is that operating lease assets and liabilities will be placed on the balance sheet alongside capital or finance leases, which are already there. For leases that have terms of greater than 12 months in duration, lessees will recognize both assets and liabilities on their balance sheets. For leases that have terms of greater than 12 months in duration, lessees will recognize both assets and liabilities on their balance sheets. Lessees will recognize right-of-use assets and lease liabilities for both types of leases. This is a change from current accounting, and this puts the focus more on what is the definition of a lease as opposed to whether a lease is an operating lease or a finance lease. Because lease classification is very similar to current GAAP, the FASB expects that most current capital leases will be finance leases and most operating leases will be operating leases under the new standard. The presentation in the income statement and the cash flow statement is not expected to change from current GAAP. The main change under the new standard is the recognition of assets and liabilities for operating leases.